And good evening. This is the Elliott Wave Daily Update for the NASDAQ 100 and the S&P 500 for Wednesday, June the 26th, 2024. Again, the market is totally caught up into window dressing, getting prepared for the end of the quarter. And so, again, I've adjusted the labeling because it's really just trying to fit into what the market is actually doing. And starting the week, I felt that we may have completed that sub-minuet wave 5, and then the minuet wave 5, and the minute wave 5, and then the minor third. That, of course, now has changed primarily due to the fact that what I look for on an hourly chart from that high right there would be a 5-wave structure down. And it started to get messy right in here. Then we get a little bit of a mess in here, but it does work out to likely count down as 5. Then we get 3 up, which would be fine for a wave 2. Then we get messy again here. So this, I'm unable to count anything more than just an ABC. Now, again, so what I'm coming up with is the possibility that, yep, we're still in a 4th wave. Small sub-minuet 4th wave, and that's an A, and then we did the B, and that would have been up to about midnight my time, or so Wednesday, Globex session, into into the beginning of today. Wow, I'm having little problems here, just putting this all together. In any case, A, B, working on a C wave down to put in this sub-minuet 4th wave. So what we still have in play, of course, would then be additional rally to back up additional new highs. And accordingly, if we were marking this as the end of that minute 4, then we had the possibility that we would get like 20,400. I think it was one of our levels on wave 1 to wave 5. Now, I'm leaving that off for right now because I think that we will finish this up, put a C wave down. We still have Thursday and Friday. Friday being the actual end of the quarter, and it's an expiration, and it's a quadruple. So we've gone from a massive expiration on June the 21st to a quadruple end of the quarter expiration on June the 28th. So I really am now hoping, because the focus should shift from end of the second quarter, starting of the third quarter. We begin pretty cleanly right about July the 12th with earnings. So we go from one thing to the next, and still with just such large positions and so much capital being invested in our markets, it just seems we're rolling from one thing to the next and managing to hold up higher. Now, I'm still looking for, again, the completion point for the minor third wave in both the S&P and the NASDAQ, but here in the NASDAQ, the minor third wave. And what's needed is one last sub-minuet 5th wave up. That would then complete the minuet 5th wave, and then the minute 5th wave, and that minor third. And from there to put in a minor 4th wave correction. Now, it could start to kick in, or possibly the beginning of the earnings season is going to be needed to get this market up and completing that minor third. So again, I can't speculate on how the earnings are going to be coming out. I'm sure there are going to be other people that think they can, and that's fine with me. But what I can say is I'm still anticipating that we will get that little bit of a bigger correction coming off. And right now in the NASDAQ, say we get up to 20,400 or 20,500 to complete that minor third, we're still looking for a drop down to the price territory of the 4th wave of one lesser degree, and that's right here. So minor 4 would expect it to find its support to complete within the fourth wave of 1 lesser degree, which is the minute, and that's it right here. So wherever we end up, the potential for this market to drop back between, let's just say 19,000 or just below 19,000, down to 17,380-ish, 17,450-ish, excuse me, is in existence. Then we rally back in a minor fifth wave, again, new all-time highs, fall back, and that would complete intermediate wave through. We come back down in the intermediate fourth wave, again, with the expectation we're going to end up back around in here. If indeed that's where minor 4 would complete, we'll come back down, same area, because intermediate wave 4 would be expect to bottom and put its completion point in within the price territory of the minor fourth wave. And then we go up again in an intermediate fifth wave, additional new all-time highs. And again, that's why we're probably looking for 21,000 or above by the time this is all done and that primary fifth wave is done. And then we're done with the cycle third wave. And then again, we'd be entering into a much larger, longer term. I've gone through this before. I was counting it out off of the January 2022 highs. I was a little bit early. And so I made my adjustments to that count. And now we're looking for that to take us higher. And again, for the same type of a cycle fourth wave to begin. Now, back to the very near term, going back down to that hourly chart, we're still just kind of playing around as we continue to. Now, what did we see today? We saw Apple really catch a bid. And at one point, it was up over $5. So I believe it was above 214. So which, again, as we're seeing, remember, I've discussed, it's like, what are we doing in the window dressing? Well, you've got portfolio managers, asset managers, all coming in saying, well, what do we need to pick up? What do we need to show a greater position in? And since the upside remains pretty firm in terms of what expectations are in Apple, well, they're now making sure they bolster their portfolios with additional Apple or just moving into Apple. Don't know. So that provided some upside today. Amazon getting itself above 190. And again, I think they may have even gotten an upgrade. Let me just kind of see what this story is. Nope, it just says that they jumped. And they were up $7, but I think that happened breaking across a big threshold of 190. Boom, we start to move. Again, we saw Meta, Microsoft hold steady, and then Nvidia came back and then starts to sell off again in the after hours. So still a lot of posturing, We've got a couple of more days of it. Plus, we do have some larger numbers. I think we've got, let me just state them now so that we know what they are. And we have coming in tomorrow, that was Tuesday. Coming in on Thursday, initial jobless claims, GDP, the second revision, durable goods, and pending home sales. So we got, a nice little grouping there. Friday, we have personal income and spending and PCE, along with the Chicago Business Barometer, consumer sentiment, the final, and not one, not two, but 3 Fed officials out talking. So kind of a full roster there. And again, we will see. But that in and of itself could help pull the market in and finish this, or really make it clear that this is going to turn into 5. I'm not really confident on how that would occur, because this is just pure mess in between, and then we're not really getting clean 5s. So, and then this is kind of a mess. It's an ABC up. So need a lot of that to be resolved. And however these numbers kind of kick in and get us down to these points where we can turn and have a rally. So maybe tomorrow we do come down, finish a C wave, and then PCE comes in and everybody loves it, and bam, we're off to the races and we start to rise. That's just all conjecture basically, or possibility. So right now we're find support again still. I've got the 382 and the 50% retracement. That would be for the fourth wave. We've already really come down to 19,730, which is that 382 level. We bounced up off of that. I think we come back down. I could find support again there again. But first, there's that for just support, not completion, support. Underneath, we have 19,675. More than likely, if this is a 1 and a 2, and we're going to come a 3 and a 4 and a 5, we're likely going to end up closer to 19,532 down to 19,431, which is the 50% retracement for the sub-minuet wave 4, and the C wave, 100% of the A wave down at 19,431. And in between also works. So we'll be looking at the structure, and if it is a C wave, we need to be able to count 5. We shall see, because today, after the close, they moved the market in a beautiful little rally we had, and then the market closed, still decent close, but then it dropped quickly, very quickly, in that additional hour after the regular close. It dropped close to 100 points from the high here at 20. Let's just go right to it. From 2027 to the low, which was in the next hour at 19,920, it was a 100-point drop. So real quick after the bell rang. But moving averages, look at them. Let's pull that open. Let's just go to the 4-hour chart. Put that like that. Look at flat. Look at that 50. Look how flat it is. And actually, the 13 and the 20, flat. Why? Chop. You can see it. So it's really kind of messy. It is very messy. Even on, look at this. So it's like, okay, kind of a nothing burger, as they call it. So gotta wait, gotta see. Now, how does that affect trading? It wasn't the easiest day to trade. There were moments where you could have gone into the futures market if you were a day trader in the futures market and pulled out some money. But it was either it was real simple if you really are easy in, easy out type of trading. But if you're looking for something a little bit more, then maybe you found it to be more difficult. But I was able to go in and trade and take home some profit. So that's all good. I'm hoping that we remain the same, but I would like to see the market get back into not having, for example, the Dow, which was fighting both directions. The NASDAQ initially, I believe, was higher, then just sank, then rose, then sank, then rose, as the higher because of Apple just really getting pumped up, but then getting dragged down because of other stocks within the index and the Mag 7. So again, looking for additional downside, but the surprise would be they don't do it and they just start to continue to pop it higher. And so all things are possible here. And we do have expectations where we eventually are looking for additional highs, but I would assume that we get a little additional downside, a new low below 19,730 before we rally back up. So put in this 4 and rally back up. Over in the S&P, not exactly the same, but also messy. Here a little bit cleaner in terms of that I redid in the A and the B, 1, 2. So maybe we come down a little bit harder. And we finish the C wave. Mind you, we got 618, which does put in a low below A, and for a C wave is not number 1. No, number 1 would be equality. But it does kind of do, it could be number 2? Yeah, it could. But once again, what I'd be looking for is 5 waves. And right now we've got it. Maybe a 1, maybe a 2, 3, 4, 5. So here, we should still probably get down to where wave C is equal to wave A, and that comes in at 54.73. You can see I put the C underneath it. Now, if it goes full bore, well, then we got that underneath. Not necessarily looking for something that strong, but then again, we have a few numbers coming out tomorrow. Could. You never know. So in the S&P, look at that. RSI, boxy. Even if it's a boxy. What is this? Boxy. Looks like it's just trading in one big box, pretty much inside yesterday. So it's an inside day for the S&P. Volumes, I'm not really sure. A little bit less than NVIDIA down there. They already took these off, so I couldn't tell you, and I didn't look, so I'm not sure. But NVIDIA continues to trade under pretty heavy-duty volume. That's a lot of stock. Boy, if you're the NASDAQ, you're just like wringing your hands because here comes all that money for all your clearing fees. In any case, I think we kind of can get down to here, put that 4 in, and then begin to rally. This is a little bit cleaner than the NASDAQ, so it looks more capable. And so that low would be that we want to come down under is 55.10. And so our first is 55.03, but that's pretty high. And the pattern itself suggests it'll go through it and start ending up below 5,500 and then down to maybe towards 54.73. And that's about it for today. Moving averages here in the S&P. You can see are flat by flat. Let's take a look at the daily. Oh boy, the chart's the same. Look, it's just all a bunch of nothing. And all the moving averages are basically totally unchanged. So everything remains intact for additional highs, more than it's going to start to break down. Which is why we're putting that ABC and put a 4, and then we'll look for that high. And then they'll start likely to break these moving averages. One would hope. All right, that's going to be it for today. The next update will be on Thursday, June the 27th.